Hello guys and welcome to another develop video. Today I take an in-depth look at Exxon Mobil Corporation, ticker symbol XOM. First, let's talk about a bit about Exxon. Exxon is an American multinational oil and gas corporation headquartered in Spring, Texas. Of course, you've probably heard of it. It is the largest direct successor of John D. Rockefeller's Standard Oil. This company is the result of many mergers, and if you want to learn more about them, please search on the internet. It does take a bit of time to understand the history. Now, let's start a bit with their valuation. Their free cash flow yield is 6.64%, and their price to earnings is 13.5, which is really good. Their business metrics look pretty okay, although not insanely good. Their return on equity is 12.45%. Return on tangible assets is 7.8%, ROIC is 7.33%, which is in general okay, but not amazing. What is really good is the current ratio, which stands at 1.31. Down to reconciliation, we can see that their estimated earnings per share for 2025 is 6.83, and with a projected growth rate of 5.5 and the current yield on AAA corporate bonds of 5.45%. We get an intrinsic value of $85.30. Next, moving on to the discounted cash flow, getting a 5.5% estimated growth rate with a 2% perpetual and an 8% discount rate, we get an intrinsic value of $138.82, which is, in my opinion, really good. Now, for historical multiples, we can see that they're trading below their 10-year average of 15.65, so this is pretty good. This means that they are not overvalued, historically speaking. As for multiples valuation, I've compared them to three competitors: Chevron, Occidental Petroleum, and ConocoPhillips, and we get an average PE of 14.25, and putting in, multiplying it by earnings per share, we get an intrinsic value of $113.73. Finally, we have the dividend discount model. The dividend discount model uses a 5% growth rate, so a bit less than the discounted cash flow. And this is to account for them not wanting to increase the payout ratio too much. We get an intrinsic value of $135. Now, the output is the average of all these four methods, and the intrinsic value is $118. Using a 15% margin of safety, we get an intrinsic value of 105.8. Using a 15% margin of safety, you get an intrinsic value of 101 dollars, and this is slightly below the current price. Now, what do I think about Exxon? Well, I really do not like gas and oil companies. I mean, they're great investments, short term or medium term, but they're not really long term compounders. The fact that Warren Buffett invested in them does not mean they're long term compounders. It's just that um, he found them at a really great price and they were bargains. But these are not companies that you, as a small investor with with a small amount of capital and the ability to invest in any stock, must invest in. So this is not a stock which I suggest. They're If they were, I don't know, at a 40% margin of safety, then yeah, they would have been a buy. But in the current situation, they're not a buy. Their growth prospects are not that great. Oil prices are terrible right now, at least for the oil companies, and gas prices also. I do not see really much potential here. I think they're managed, they're okay. Their return metrics are pretty good, but nothing is really that amazing here. I mean, they've got an okay discount rate, they've got an okay uh, balance sheet, they have okay return metrics. So this is all around okay or good business, but this is not spectacular. This is not a 100 bagger. This is just a good company, but I wouldn't invest in it yet. If it dropped to, I don't know, 95, $90, then yeah, they probably would be a buy, but for now, I do not think they're a buy. Also, I should mention you should do your own due diligence. If you find something that I did not, or you believe that they deserve a higher growth rate, then yeah, they're a buy. But Of course, your own due diligence is the most essential element because I'm not an investment advisor and I do not give out legal advice on financial advice. You should do your own analysis. Now, to end the video, I'd like to talk a bit about our affiliate for today, Ticker Data. Ticker Data is a tool. You see here the ticker symbol with the real-time financial data. So this is Ticker Data. It's a great tool. It is pretty cheap, and I suggest you check it out in the comments, in the description below. Also, do not forget to check out my investing blog from the link in the description below, where I talk about different topics, different stocks, and I do great in-depth analysis. And I think for those savvy investors out there, you'll just love it. Thank you for watching, and I hope to see you in the next video. Bye.